Podcast Network Asia.
You are listening to First Metro Securities Philippine Stock Market Weekly podcast, where we feature timely and relevant discussions on the Philippine stock market and the economy in the hope of providing you investing and trading guidance. Here's your host.
Hi investors! This is Anjz from First Metro Securities. If you're looking for trade ideas or wondering which stocks to keep on your radar, then you're in the right place. Today on Market Bites, let's dive into some key highlights from our latest company update on BDO Unibank Inc. We are maintaining our buy call for BDO with target price trimmed to 170 pesos. Post adjustments to our estimates, we now expect BDO to deliver 4% and 9% earnings growth for FY25F and FY26F. BDO's 1H25 earnings fell short of our estimates, increasing by only 3% year-on-year to 40.6 billion pesos due to higher than expected Opex related to volume and branch or IT expansion costs. This led to a drop in ROE to 13.9% during the period, from 15.1% in 2024. Nevertheless, the bank's key operating metrics remain robust, if not slightly better than expected. Net interest income in 1H25 grew by 7% year-on-year to 98.1 billion pesos, on the back of 13.9% year-on-year loan growth and a 1 bp year-on-year NIM expansion to 4.36%. Non-interest income rose by 15% year-on-year to 38 billion pesos, driven by 17% year-on-year growth in fee income. On asset quality, NPL ratio eased to 1.75% with an NPL coverage ratio of 140%. The bank has ample room to expand risk assets with a CET1 ratio of 14.7%. As for the higher than expected Opex, we see this as the result of BDO's calculated deployment of capital toward initiatives that support growth and franchise value. Management emphasized that the bulk of the increase stemmed from quote-unquote build the bank initiatives, primarily IT and branch expansion, which rose 47% year-on-year, while discretionary expenses were kept in check at 10%. Meanwhile, volume-related costs, up by 20% year-on-year, grew faster than revenue due to strong consumer activity. While Opex growth is expected to trend down gradually over the next 1 to 2 years, normalization will only fully materialize after 2028 as legacy systems are phased out. So, what would make us more bullish on BDO? First, faster than expected loan growth as the economy improves and big ticket capex materializes. Second, NIM uplift arising from an improved loan or asset mix and more RRR cuts. Third, higher market share across product segments, owing to expansive branch banking reach. Fourth, an improved CIR from AI efficiency gains. Fifth, asset quality improvement, allowing for lower credit costs. And fourth, ROE reaching high teens levels. But we're also watching for the risks. Weaker than expected loan growth and business volumes, especially fees, asset quality deterioration amid the shift in loan mix, NIM pressure due to larger than expected rate cuts and or tight liquidity, and negative operating leverage arising from higher than expected Opex growth. Once again, let's say buy call for BDO at 170 pesos target price. And that's it for today's podcast. For more updates, make sure to follow us on Facebook, Instagram, and YouTube at First Metro Securities and on TikTok at FirstMetroSec. Thanks for tuning in. Hope this has been helpful.
Thanks for listening to First Metro Securities Philippine Stock Market Weekly podcast. Don't forget to follow us to get first dibs on our new episodes. For more up-to-date market news and info, exclusive content, and the opportunity to connect with your fellow Filipino investors and traders, join facebook.com/groups/FirstMetroSec and be part of the First MetroSec family.
FirstMetroSec is providing this podcast as a general market commentary. Reference to any specific security, product, or entity do not constitute as an offer or a solicitation of an offer to buy or sell any financial instruments or to participate in any particular trading strategy. The statements, comments, views, or opinions expressed by the hosts are subject to change without notice, and FirstMetroSec is under no obligation to update, amend, change, or correct any of the statements, comments, views, or opinions expressed. The statements, comments, views, and opinions expressed by the guests are their own and do not necessarily reflect the view of FirstMetroSec. FirstMetroSec disclaims any liability arising from reliance on or reference to any information obtained in this podcast.
The views and opinions expressed by the podcast creators, hosts, and guests do not necessarily reflect the official policy and position of Podcast Network Asia, the hosts of the program, or other programs of the network. Any content provided by the people on the podcast are of their own opinion and are not intended to malign any religion, ethnic group, club, organization, company, individual, or anyone or anything.